Asian Pacific markets were mostly lower as China kept its 1- and 5-year loan prime rates unchanged. Earlier this week, the People's Bank of China kept the 1-year medium-term lending facility rate steady at 2.5%. Mainland China dipped 0.7%, while Hong Kong's Hang Seng Index fell by 0.6% as of the final hour of trading. Japan's Nikkei rose 0.1%. S&P 500 futures climbed this morning as investors look for the benchmark to add to its latest record high. The Dow Jones futures is currently up about 0.1%. Stocks are headed for a winning week after the S&P 500 reached a fresh record on Tuesday alongside the Nasdaq. The stock markets were closed yesterday for the Juneteenth holiday. Nvidia led the charge higher as the artificial intelligence darling and chip maker surpassed Microsoft to become the world's most valuable company. Nvidia's stock has climbed 174% so far, and the AI boom continues to boost. To give us more perspective on the markets, we are joined by Simphiwe Letlojane, who's an investment strategist at Absa Investments. Simphiwe, thank you so much for your time. Let's start off with what we're seeing when it comes to both the Rand and our local markets. Let's start off with the Rand, for instance. It's fallen almost 1% after rising to a near 11-month highs against the dollar yesterday. What's changed here in terms of sentiment?
I think it is quite an interesting one when you're looking at some of the market movements that we're seeing today. So we're seeing the Rand trading slightly weaker compared to what we saw yesterday, but it was quite a bit of an appreciation that we had seen. So potentially a little bit of profit taking potentially by some traders, especially if you're looking at the all-share as well in terms of the financial sector. So that also slightly in the red today after some of the strong rallies that we had seen earlier in the week.
Let's talk company specifics for now. You go into SENS and you look at announcements coming out of Nampak, Standard Bank and the likes. What caught your attention?
Yeah, I think with Standard Bank, they are still forecasting, positive growth for this year. They are coming from a fairly high base last year, so growth is expected to be much slower this year, around, mid-single digits. And I think what they're expecting in terms of that growth is that the insurance and the asset management gave to drive a positive performance. On the banking side, there is still some positive momentum in terms of, the interest rate impact, so still benefiting from high interest rates. But there are some offsetting factors if you're looking at, balance sheet growth. If you're looking at some of the foreign exchange movements, especially for the rest of Africa operations.
The one company I found interesting was Nampak, because at some point it was up about 22%. And I'm wondering, given some of the, the changes they've made here when it comes to divesting out of non-core assets, do you believe that there's some kind of attractiveness when you look at the underlying business now?
Yeah, I think, look, in terms of the intentions that, management has around the turnaround strategy, exiting out of non-core assets, and also really trying to claw back out of that, debt hole that they dug themselves in, a couple of years ago with some of the intentions to expand into the rest of Africa that necessarily didn't turn out as desired. So I think it is a positive, certainly, when we're seeing a bit of a change in strategy and, some improved performance from some of the continuing operations, and also cutting some of the losses that, from the operations that are not necessarily profitable, and looking to use some of those, assets to then try and reduce debt on the balance sheet.
Are there particularly any interesting themes you're picking up when you look at some of the results coming out of corporate South Africa?
I think it's been a very interesting one, fairly mixed, and I think various sectors are performing differently. So if you're looking at your more defensive sectors, there is a bit of earnings resilience there, but of course companies probably having to sacrifice margins, seeing a lot of margin sacrifices in order to try and maintain prices low and maintain volumes. So revenue looking fairly flattish, and then a lot of cost management to try and boost earnings. Whilst when you're looking at your cyclicals, in particular your clothing retailers, so within that sector, it's also fairly mixed. Some of the retailers are, doing better than others. And if you're looking at some of the retailers that are holding up, it's the ones where They typically have lower price points, and for more for the mass market. So consumers in this current environment, turning to those retailers, as finances are constrained. And if you're looking further in terms of some of their cyclicals, vehicle and retailers as well under quite a bit of pressure. Rand hedges, on the other hand, they always, if you're looking at NASPA's process, those guiding towards positive earnings growth, and quite a good earnings recovery as, the rest of China continues to unwind, whilst lastly, if you're looking at resources, quite a lot of the guidance coming out of those countries is for lower earnings, of course, due to depressed prices.
Simpiwe, unfortunately, we're going to have to cut our discussion short. That is Simpiwe Letlojana from ABSA Investments.